Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling, and thank you for joining us today on Market Journal. Glad you could take some time from this busy holiday season to be with us on today's show. And we're beginning the broadcast by taking a look at what's happening in markets by speaking with author and analyst Elaine Kub. The USDA's final estimates of U.S. production in 2020 will be released next month. And as we approach the final weeks of the year, we spoke with Elaine about what we can expect in that report, year-end price movements, and the role a lower dollar is playing in the markets.
Yeah, we do see the US dollar index as low as it has been since 2018 when the Fed stopped that last round of quantitative easing. It's now, the number is about 90, so that's pretty low, and it continues to move lower day by day. The reasons for that are, of course, the Fed pumping in lots of liquidity to the market system because they really don't want to stress the financial markets, along with all the other stress that's going on in the economy. So that all makes sense. And the thing is, that's likely to continue. I mean, I believe the idea of the dollar staying lower for longer is something we can really count on from the Federal Reserve. Now, what happens when you have a lower dollar is that's actually bullish to grain prices, because if the price tag in dollar terms is lower, then foreign buyers can afford to pay higher price tags for US grains. So having this lower dollar has been a bullish influence, and we've seen it in the past couple of months. You see a really clear upward trend in the grains while you have a simultaneous downward trend in the dollar. And that's not just a coincidence. I mean, that is part of the mechanism of how grain prices are set.
And Elaine, I think it's important that we look ahead to 2021, because as a difficult year as 2020 was, we could be seeing some changes because there's the COVID vaccine that should help usher in a return to normalcy. And we also have a new administration in the White House too. What does that mean for the dollar and the price outlook for various commodities?
You're right to mention the new administration. So we've got Janet Yellen coming in as Treasury Secretary. And that will mean, since the market is pretty familiar with Janet Yellen's bullishness and her accommodative stance towards monetary policy, and now she's coming in to make fiscal policy, which will also be accommodative. So this is just an absence of a threat to the dollar. To me, this suggests that we should see that dollar remain lower for longer, and we don't have a big threat of a big pop in the dollar that would change something for the grains. The grains should be able to maintain the price levels where they have now based on the dollar.
I'd also like to get your thoughts on the potential hire of Tom Vilsack as Secretary of Ag. Joe Biden tapping him for the role that he held for 8 years under Barack Obama. So assuming Vilsack is confirmed, what are some things we can expect in ag in the short and long term? Will this be a big shift from what we've seen for the past 4 years with Sonny Perdue?
You know, I think, again, this is an absence of a concern. It's more of a status quo. There would have been appointees that could have been made where you would start to wonder, is there going to be a major shift in the crop insurance program or anything like that? But I think with this appointment, Tom Vilsack, I don't think we should be expecting any major surprises or any changes in the way that the grain markets work or grain production is supported by the federal government.
And for this next question, Elaine, hoping maybe you can give our viewers some personal insight into how you've approached things this year. Remind us of your acreage and the operation that you have in South Dakota. Has what we've seen in 2020 changed your approach to marketing and risk management at all?
Yeah, risk management is a good topic for this. So I'm not a big farmer. I only farm a few hundred acres, and I did not have super yields this year. But I have, discovered, as people do, that real world agronomy is a lot like real world economics. You can't necessarily control the variables and really know why. It could have been spotty rains, could have just been the kind of soil I'm dealing with. But I didn't get as good of yields as some of my neighbors even. So the diversification is a risk strategy that I think a lot of people could bring in, and I wish I would if I had more acres. But you can prove that financially, if you have a multiple basket of assets, you can lower your risk because not everything is going to go wrong. And you can do that agronomically too, right? You can listen to all the smart people on Market Journal, the agronomists that you interview, and all of the different production practices that you could incorporate in. And that would be a risk management strategy, is to just geographically diversify, production practices diversify. That's really my takeaway from 2021, is to try new things.
And Elaine, we're still a few weeks out, but never too early to talk about the big annual crop report coming out on January 12th. Any guesses as to what we could see here?
Well, the January report does sometimes tend to be a market mover. Those can be volatile market days. The only thing that I would really be willing to stick my neck out at this point and think that we might have enough evidence for the USDA to push this would be higher export numbers for wheat, corn, and soybeans. But with soybeans, it gets really tricky because those ending stocks are already so low on that table. You've got a stocks to use ratio of 4%, which is extremely bullish. We know that that supply and demand situation is going to remain tight, at least for the next month or so, six weeks, going into February, when you've got the South American supplies coming online.
Thanks to Elaine for joining us on the show this week. Coming up later on in the show, UNL livestock economist Elliott will be here, and we're going to talk cattle markets. Next up, if you drive along I-80 long enough, you'll notice there is a lot of corn in Nebraska. In fact, there are 9.8 million acres of it, yielding an average of 182 bushels per acre. This makes cornstalk residue an easily accessible and cost-efficient winter grazing forage resource for many cattle producers. But while cattle can get a good share of their dietary needs met through cornstalk residue, supplementation needs will vary among the herd. Market Journal's Bill Dodd has more.
With harvest in the books around the state, cornstalk residue is ripe for grazing cattle. Cornstalks are a great economical asset to many Nebraska producers and is often underutilized. However, when producers see fit to take advantage of this abundant resource, it's important to keep in mind the nutritional needs of the particular class of livestock feeding on the residue. With this in mind, I spoke with Nebraska Extension Range Management Specialist Karla Wilke to discuss any supplemental needs for cattle grazing on cornstalk residue. She tells me one thing to be particularly aware of is the animal's TDN.
So it's a way to measure energy that's available for the animal. And so essentially cornstalk residue can kind of be variable in how much TDN is taken in because of the selectivity of the animal and the fact that it starts out pretty good because of the downed corn, and the husks are very digestible and the leaves are pretty good quality, and so they select and pick through that. But it can be variable, but 50 to 60% TDN, and then it just depends on how much they're able to eat then as to how many pounds of TDN they might take in.
When it comes to grazing calves that are weaning, cornstalk residue can be a great source of nutrition. However, nutritional supplementation will be required for this class of livestock, and depending on the rate of gain you're looking for, distiller's grains could be a good source of extra nutrition.
You know, if we just have that calf out there grazing the residue, he'll need 9.2 pounds of TDN to gain 1.5 pounds a day, which isn't a very large rate of gain for a calf that's like 600 pounds. But that forage resource will only provide about 6.8 of those pounds. And so some people assume that if they're not expecting a large rate of gain out of a growing calf on cornstalk residue, that they don't really need to supplement, but that's not actually the case, because that calf would lose weight if he didn't receive some supplementation. So distiller's grains is a great way to supplement.
When dealing with dry pregnant cows, it's best to assess any additional nutritional supplementation by utilizing a current body condition score. Beyond that, knowing what trimester each given cow is in will greatly impact any supplemental decisions.
And so if a cow is in moderate condition, if she's in a 5 to 6, and she is not lactating anymore, and she's in her second trimester of pregnancy. She has a pretty low requirement, and that cow can normally meet her requirements just grazing the cornstalk residue without supplementation. Times when supplementation may be necessary for that cow is if she's left out there quite a while and she starts to move into her third trimester, and then the feed available out there has begun to decrease because of the stocking density of the cows. If we get into a lot of weather events where it's extremely cold and they're using more energy for just basal metabolism to stay warm. If the cow's fighting mud conditions, she could be burning more calories than she's getting. So those are situations where the dry cow might actually need some supplementation. But in general, if she's in a moderate body condition score, she should do pretty well. But it's very important for producers to monitor that body condition score regularly and make sure those cows aren't dropping off in condition.
On the other page, if a cow is lactating and calves are nursing, energy requirements for the cow-calf pair can increase substantially.
We have kind of observed an uptick in the number of pairs going out to corn stalks. And so these could be later summer born pairs, so that means that the calf might have been born in May or June, and so he's just still on the cow. He's an older calf but still on the cow, and so he requires some supplementation. Milk doesn't supply all his needs as he begins to grow, and then the cow, due to lactation, her needs increase considerably because of lactation. We've had research projects where we've actually fed about 5 to 6 pounds of dried distillers out on corn stalks to pairs, and the cows have done well, and the calf has gained about 1.5 pounds a day gain. So that can work for those. Fall calving cows, so maybe in August, September, early October born calf, when those go out to corn stalks, they are actually in peak lactation, and the bull may be going out with them so that you can breed the cow out on corn stalks. That requires a little more supplementation because it's very critical that the cow not be losing weight at peak lactation, because the next thing that needs to happen right after peak lactation is for her to rebreed. And if she is in a declining plane of nutrition, sometimes she quits cycling and doesn't get rebred. So we've done calculations that would suggest that that pair might need upwards of 8 pounds of distiller's grains to make sure that her needs are met at peak lactation, the calf begins to get some supplementation as well, and that we don't mess with that breeding cycle.
As you put your herd out to graze on newly cut corn stalks, you can rest easy knowing they're getting a good share of their nutritional needs met through an abundant and cost-effective resource. But keep in mind, additional supplementation may be necessary depending on the class of animal grazing. Reporting for Market Journal, I'm Bill Dodd.
Thanks, Bill. If you'd like more information on grazing supplementation, we've added some helpful links on the Market Journal website. Sticking with the cattle theme, and we have a look at cattle markets this week with UNL Livestock Market Analyst Elliott Dennis. Spoke with Elliott on Tuesday and began by asking about the current state of beef demand.
So beef demand in the fourth quarter is going to be down a little bit by about 0.2% year over year, so in comparison to 2019. One of the good resources that I refer to on what is potentially beef demand going to look like in regards to either at home or retail is called the Retail Demand Monitor out of K-State, and they actually specifically asked people, what is this expenditure going to look like on specifically beef? And about 75% of people say they're going to be consuming as much or more beef this year than they did in previous years. That just goes to show that even though we're not maybe having these large gatherings, there is still a desire to consume particularly beef, and this goes for other products as well. An example would be with turkey. During this Thanksgiving, people thought, well, maybe turkey's down, but actually throughout the pandemic, turkey actually has one of been the largest benefactors. A lot of people have been buying turkey, they've been eating it, and even with smaller gatherings, more people bought turkeys than we originally thought.
Let me get a quick question about this month's Cattle on Feed report too. What are some things that you'll be looking for in the report, and what are some things that you would advise us to pay attention to?
So as we're coming out of the pandemic, things were starting to open up a little bit more. We saw a record number of placements. So that was we had pretty terrible demand going through the summer. We were down about 8% throughout the year. Then we're coming out, a lot of people started placing cattle again, and now we're at a situation where people are starting to back off a little bit now. They're starting to realize that maybe we overplaced a little bit, and this next cattle on feed report that's coming up, analysts have that at about 90% of 2019 in November. So those are November placements. What do we look like compared to 2019? It's about 90% of what that is. Marketings are still about 97% of that, analysts suggest. But on average, we have the same number of cattle on feed. So even though we've placed less, because we placed so much in September and October, we're pretty much at where we need to be. So I think people have already kind of priced in their expectations. They placed a lot of lighter animals coming off of grass, and now we're just kind of waiting for, what is going to happen in these next couple of months. But definitely set to capture those premiums in April, May.
Elliott, we've been talking on the show for the last several weeks about higher grain prices. What advice would you have for the cattle producer who is having to make feeding decisions and figure out their input costs?
Yeah, so maybe I'll speak specifically to distiller grains, which tends to be a large input use, and a lot of people who were adversely affected as ethanol plants started to shut down. Obviously, we know distiller grains, either dried, modified, or wet, are co-products or byproducts of ethanol production. During the summer, when there were all the shutdowns, people weren't driving as much, ethanol price dropped. And so as a reaction, the ethanol plants decided, hey, we have to idle or completely shut down, particularly in western Nebraska, where people relied upon distiller grains. Then when those weren't available, people were left kind of scrambling. One of the things that I look at is recognizing from the animal scientists that they say distillers grains have value above corn as far as protein and energy. I look at what the price is compared relative to corn. And right now those have been trending up, but they're seasonally trend. They always seasonally trend at this time. Particularly right now, the wet distillers grains relative to corn prices on a dry matter basis is about 1.2, which means it's about 20% more expensive on a dry matter basis. But what that implies is that as long as you feel like you're getting more than 20% of the value back relative to corn, then you should be okay. And although prices are trending up, they tend to be kind of seasonally, they tend to seasonally trend this way. But we are seeing a little bit stronger pressure just because corn prices are just so high right now.
And Elliott, let's end things today with any marketing or risk management decisions that you want to mention to us that we haven't talked about yet.
Yeah, so a few weeks ago, USDA RMA, in conjunction with broader USDA officials, hosted a webinar here at University of Nebraska and Department of Ag Econ. There we went over for about an hour and a half about livestock risk protection and all the changes that have happened, large modifications to that. In some cases, depending upon the coverage level there, the government is basically paying 50% of the premiums for producers. I went ahead and compared that to what it is for CME options. So if you were to go and buy that in Chicago using a put, these are incredibly valuable. And of course, you have to be diligent on, ensuring how you manage that risk, but really looking into LRP as a source of risk management. I would really suggest, and we have those tools and resources from the Department of Ag Econ that are available for producers to use.
Thanks again to Elliott. We've got a link to that webinar he just mentioned on the Market Journal website. Next up, Nebraska Farm Bureau President Steve Nelson announced his retirement in August after serving as president for 9 years. However, Steve has served in numerous roles in Farm Bureau, including at the county, state, and national levels. And while he is retiring, Steve will still be involved in Farm Bureau, including mentoring young farmers and ranchers and encouraging them to take part in leadership positions within the organization. You can read more about Steve and his reflections from 9 years at the helm of Nebraska's largest farm and ranch organization in the December Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, I guess it was too good to last. The colder weather came through in a big way this week. How are things looking for the week ahead?
Well, Troy, we certainly did have the cold weather. In fact, we've seen more like winter-type temperatures that we would expect to see at this time of the year. When it all said and done with, we were slightly below normal to slightly above normal, depending on which day you looked at. And really the only precipitation event that we had during this week was that snow that moved through central and portions of southwest and south central Nebraska on Tuesday. And we had some light accumulations with that. Outside of that, the snow hung tough. It didn't seem to want to break toward the warm side until we got to the midweek period. So a little bit slower than what models were showing last week. And then, of course, we've seen a decent couple days, and now that here we are at the weekend, and we're seeing a little bit of a cool down, but there's a couple more warm days in here before we come crashing down right before Christmas. So let's take a look at the upper models, and what I will draw your attention to is we have a subtle wave that's moving through the state today that will bring a slightly cooler air mass to our region. We'll be primarily in the 40s in the statewide. And there's another system upstream that will move in through tomorrow. So low pressure down in Texas. Really, there's no moisture source for any of this trough to work on. So it's really going to be more of a dry frontal boundary passage. Most of the precipitation will form to the south of us. And then we get a much deeper surge of cool air as we go into tomorrow. Really focuses that cold air to the east of us. So it's just going to be a temporary little blip in the overall scheme of things. Will be widespread 30s across the state. Not expecting much in the way of any precipitation. It's all going to be confined to the Pacific Northwest and the northern Rockies. Then as we go into Monday, we start to see that trough push to the east. Ridge starts building into the backside of it, and we're going to warm up dramatically. In fact, the warmest temperature will be across western Nebraska. We should make it up into the upper 40s, probably lower to mid 40s across the east. Most of the precipitation runs up the eastern seaboard. Now, as we get into the day on Tuesday, there is signs of a trough trying to develop in the western United States, pulling the cold air down behind it. For our area, it does look like most of this frontal boundary passage with the cooler air that is trying to work into the northern plains is going to stay to the south and the west of us. So most of the precipitation stays over the northern Rockies. And then as we get into Wednesday, that cold air, the trough tries to drive all the way down southward, start to bring in cool air into our region. It's going to be a dramatic change in terms of temperatures. We're going to be confined basically to normal to slightly below normal 20s and 30s. Most of the snow stays to our north. And as we get into the day on Thursday, that cold air is straight coming down from Canada, so it's going to be a rather raw day the day before Christmas. Primarily very windy, not much in the way of any precipitation, but we're going to be confined into the 30s and maybe even the 20s. All the snow field remains to the east as another big storm takes shape across the eastern seaboard. And then on Christmas Day, we start to see the ridge returning into our region, much warmer conditions as high pressure builds in, and a nice actual Christmas Day. Probably should be somewhere into the low 30s or low 40s to the upper 40s, and then we start to see that trend continue as we go into the weekend. Looking at the 8 to 14 day forecast, it takes us from essentially right before Christmas Eve all the way through the Tuesday after Christmas. Warm conditions as that ridge builds in, and then there are signs that this will break down rapidly toward the last 3 or 4 days of the month. So with that ridge building in, we don't expect much in the way of precipitation. So Troy, overall, can't really argue about a bad forecast here. It looks like a nice day on Christmas. We're just going to have to go through a roller coaster in temperatures before we get to a nice day on Christmas Day.
Thanks, Al. Finally today, Nebraska's wine industry has grown from just one winery in 1994 to over 30 today. This year, the vineyard saw some unfavorable weather early in the season, which impacted harvest. Market Journal's Maddie McIntosh has more.
Nebraska Extension Viticulturist Dr. Paul Reed says this year for the grape industry has been hard, but Nebraska is as strong as ever.
Even though this past growing season has been a difficult one, late frost reduced the fruit set, flowering and fruit set in the spring. For many growers, there are some that escaped it or partially escaped it. And depending what grape they're growing, their crop was reduced as much as 50% in some cases, and in some it was not reduced significantly. But my experience is backed up by checking and trying some of the wines and talking to our winemakers and growers and discovering that even though the crop was reduced in numbers or in quantity, The quality actually is better than some years past because the growing season was really so dry, it meant less disease problem. And yet the nights were fairly cool, so that helped a bit too, because during the daytime, the grape, like any other crop, it's photosynthesizing, it's making its sugars, its product. And then at night, respiration is taking it away. And so respiration is related directly to temperature, so cool nights are a real benefit to the grape quality and therefore the wine quality.
The western wildfires might affect the industry in the short term, but Nebraska may see a positive outcome.
Not only were there damaged vines and damaged facilities out there, the grapes contract what they call smoke taint, and that can carry over on the skins of the grapes and into the subsequent wine, and so that can be a problem. Economically speaking, it probably is no damage to Nebraska's industry, perhaps a little bit of help, because savvy wine buyers are perhaps going to recognize that some of their favorite California wines are perhaps suspect because of smoke taint, and so maybe it's time to try a good local Nebraska wine. As we approach the holiday season, it's a great time to be celebrating local producers of lots of commodities and productions. Even going to Europe or Australia, I take 2 or 3 bottles of Nebraska wines that I can be proud of, wines that I can hand to somebody and say, here, try this one. You will be pleased and pleasantly surprised, perhaps.
Reporting for Market Journal, I'm Maddie McIntosh.
Thanks, Maddie. If you'd like to learn more about viticulture or the history of Nebraska's wineries, visit viticulture.unl.edu. That's going to do it for this week's show. Remember, if you missed a story, you can download the Market Journal mobile app or follow us on social media to join in on the conversation. And don't forget, you can get the latest updates on the coronavirus outbreak at covid19.unl.edu. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching and have a wonderful holiday season.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.